Hello everyone, this is Satish Kumar. I'm here with another topic for Indian economy. So in this lesson we are going to learn about a very important topic, banking. So today we will be learning about the introduction about banking, and we will also learn about the evolution of banking in India. Okay. So banking. See, in the Indian economy, there are many important topics. Among this, at present, banking is considered as one of the very important topic. So we will be seeing this topic very comprehensively, and also in detail, small points, all things will. Okay. See, banking is generally considered as a major factor which helps in economic development. Okay, in fact these kind of questions are even asked in mains. What are our role of banking in economic development, like that, right? See, a sound banking system will mobilize the deposits from people, and it will help in lending loans to business class who will invest it, and this may result in capital formation, and which may lead to the economic growth. Okay, so banking play a very vital role, not only in terms of capital formation, that is um, collecting deposits and lending loans. They also does a whole lot of function in the modern banking, especially at current times. Banking does a number of functions, and all these functions are very vital for the economic growth. Okay, they do a lot of services, right? uh, for the business class, for the ordinary people, every segment of the people. Okay, are benefit, get some benefit from banking sector. Okay, without bank it is even very difficult for a modern economy. Okay, modern economy depends so much on bank. Also, an economy to achieve development, no, why banking is very important is, countries which have very little banking coverage, that is, the banking is not yet fully developed countries, those countries face difficulty in economic terms. In fact, they are lacking in the economic development. In fact, when India in the 1960s and 70s, we had banking not fully developed. Even today, our banking system is not fully developed, but we are having a sound banking system in India. Okay, in fact, our banking system is enabling us. In fact, these days we find that banking sector is growing very fast, but there are still lot of area to be covered by it. But Indian banking system is generally considered as one of the sound system. So less developed countries, developing countries, most developing countries, no, they are not utilize the capacity of banking fully. In fact, that banking did not penetrated to the masses. Okay, only when the banking penetrated to each and every person, to the last person, that economy will be fully developed, well developed. Okay, so that is the importance of banking. So what is banking? I have already given it. See, bank generally is a financial institution, and it primarily functions, primarily performs two functions. One is it mobilizes deposits. Okay, so from whom it will mobilize? It will mobilize from individuals like you and me. It will mobilize from businesses. It will mobilize from financial institutions. It will mobilize from governments who have surplus funds, right? So bank mobilize from a whole lot of people, and then bank also, for this deposit, bank pays some interest to those people. That is why they are depositing in bank, and for them the money will be safer in bank. Okay, that rather than having in the home. Okay, tomorrow you are having in your house some money, tomorrow a thief come to your house, if he takes it, the money is gone to you. But if you have it in a bank, it is safe for you. Okay, that's why people these days uh, rely on bank, because it is safer, that's their money is safer. Okay, and also if they have the money in their own hand, it is lose the value because of inflation, right? We saw, no. But if it is parked in the bank, no, bank will give some interest. Okay, and that interest will fetch them some profit. So that's why it's a dual function. Keep putting deposit in bank is gives dual advantage. One, your money is safe, then you also get interest. Okay, then the second function of bank is, second primary function is forwarding loans. Why do bank forward loans? See, bank forward loans because bank is a financial institution which is set up to earn some profit. Okay, and they collect deposit, and for that deposit they have to pay some interest, and they will use the deposit money that is collected to lend loans and advances to people, and from lending this loan and advances they get some interest. Okay, in fact generally the the interest rate that they give to the depositors will be lesser than the interest rate that get from the that the loans that they provide to the customers. Okay, so who are the people the banks will lend? They will lend to individuals, governments, uh, businesses. So they will also lend to all other people. Okay, so this is the primary purpose of banking. In fact, this is what the primary purpose of bank. But bank doesn't only function these two functions. They are function, as I said earlier, no. In the modern day banks perform a large number of functions. Okay, so those could be categorized into secondary function. They do agency function. They do number of utility function. They will guide businesses of how to uh, what is the exchange. They will help them to change exchange currencies. They will guide in investment decisions. They guide them in interest rates. Okay, and they will also help them making prudent investment decisions. So a whole lot of functions are done by bank. They will help them to uh, mm, transfer money. Okay, so banks perform a whole lot of function. Okay, and these functions are termed as secondary function, agency and utility. There are a whole lot of functions. We are not seeing all those things here. Okay, so based on the functions performed, banks can be categorized into universal banks and differentiated banks. What is universal banks and what is differentiated banks? A universal bank will perform both the function, that is primary and the secondary function. That is, they will perform mobilizing deposits and loans and lending loans. At the same time, they will also perform agency and utility function. Okay, they are called as universal banks. The differentiated banks are, they perform only few functions. Okay, they may be performing only certain function. Some will only lend money, they won't accept deposit. Okay, some banks will only engage in providing services to its customers, like investment decision, other things, knowing the secondary functions like that. So these called a differentiated banks, becomes they perform only few of these functions. Okay, this is a small differentiation. What is universal bank, what is differentiated bank? Okay, we have already seen that banks play a major role in the economic development, and India's bank are today considered as one of the best bank in the, in fact, developing world. And we are continuously uh, our RBI and other institutions are working towards making our bank much better. Okay, And in India, banks are regulated by the Central Bank of India, that is RBI, which is the apex body. Okay, we will see the banking structure soon in the next class, but in this class we are going to see some basic banking history of banking in India, that is the evolution of banking. Okay, here we will see the pre-independence and post-independence. Okay, what is happening? So first, when was pre-independence period? I have put in here the time period as 1770 to 1947, because the first bank in India was set up in 1770. The bank was Bank of Hindustan, although it was set up in Calcutta, because then Calcutta was the major place in India. See, mm, this bank did not last long, but later lot of banks established. Okay, in fact during pre-independence time between 1770 to 1947, there were 600 banks, but more than 600 banks, but none of these banks as like Bank of Hindustan, most of these banks were um, not able to survive. Okay, in fact they closed or like that, they did not survive for a long time. There are multiple reasons for that. Okay, why they did not survive in those days? No, customers were not, even today customers are not paying regularly. Okay, those days are more frauds. Okay, there are multiple reasons. Then there is lack of technology. In those days there is no technology. Then there will be human errors and time consuming because lack of technology. And there are very fewer facilities like that is available today. And like they don't even have management skills, lack of proper management skills. Okay, so as a result most of the banks failed and did not survive, but still some banks were there. Okay, then the British also, the East India Company that ruled India, no, the East India Company that built three presidential bank in India, one at Bengal, another at Bombay and Madras. In fact these are the three presidencies at during the British time. So in all these three presidency, first was in Bengal 1809, and Bank of Bombay in 1840, and Bank of Madras in 1843. Okay, and these three banks were later merged and into a single bank known as Imperial Bank of India in 1921. That is by during the British time itself. In fact, at that time this Imperial Bank is a central bank during the British rule. Please remember this point, because you have to understand the name itself, Imperial Bank of India. For the British, this is the central bank. In fact, RBI was set up in the 1935 itself, right? At that time, RBI is a private bank. So at that time, the uh, central bank was Imperial Bank. RBI became central bank in 1949 after India got independence. Okay, you have to remember that point. RBI was initially a private bank. Okay, in fact during the British time the central bank was Imperial Bank. In fact the Imperial Bank also was later nationalized in 1955 after the British left, and it was named as the State Bank of India, which is at present the largest public sector bank. Okay, please remember this point. So we have already seen why the banks failed, why we did not add so much of bank during the British time, very little bank. Now we'll see the post-independence period after 1947. See, when India got independence, as I said earlier, no, all the banks were private banks. Okay, there is not any government bank. Even the British banks were privately owned. The Imperial Bank that is set up, no. So India, this is a major cause of concern, because private bank will not reach the masses. Private bank will be most profit motive banks. Okay, So a lot of problem. So government wanted to nationalize these banks. Okay, that is why the Banking Regulation Act 1949 was passed. By this, the Reserve Bank of India was nationalized in 1949 and it became the Central Bank of India. Okay, and the State Bank of India, no, which was merged as Imperial Bank of India, all the three presidency bank which were merged, and become State Bank of India, it was also nationalized in 1955. Okay, and there were also other state banks um, which were also, there were 7 subsidiaries of State Bank which were also nationalized in 1959. Those are all called State Bank of Patela, State Bank of Hyderabad, State Bank of Bikaner and Jaipur, State Bank of Mysore, State Bank of Travancore, State Bank of Saurashtra, State Bank of Indore. All these are considered as State Bank associate banks and they were also nationalized. In fact, in 2017, uh, uh, most of these banks were, most no, all the banks of all the associate banks were merged with SBI, and today we have one large State Bank of India. The reason is, see, India do not have large bank like international. In fact, top 50 banks of the world, India doesn't have one. So we wanted a large bank like international bank, top bank. So we wanted State Bank to be one. So what the government did is they merged all these 7 associate of state banks into one bank. So today we don't have any State Bank of Patela, State Bank of Hyderabad like that. Okay, this was done very recently in 2017. In fact, few banks 2014, 2010, two banks were already merged to State Bank of India. The remaining 5 banks were merged in 2017. Okay, this kind of point. In fact, when you learn, pick all these small points in detail, some of these questions may be asked from this area. Okay, and then the second major nationalization, in fact this that was the major nationalization happened, and that happened in 1969 during Indira Gandhi time, when 14 banks of 14 banks were nationalized. Okay, I have given here the 14 banks: Allahabad Bank, Bank of India, Bank of Baroda, Bank of Maharashtra, Central Bank of India, Canara Bank, Dena Bank, Indian Overseas Bank, Indian Bank, Punjab National Bank, Syndicate Bank, Union Bank, United Bank, and UCO Bank. These are all the 14 banks that were nationalized in 1969. This was a major event in the Indian banking, Indian economic situation. Okay, in fact, it was considered as one of the uh, biggest decision made after independence. Okay, because it will have such a effect, because uh, 14 banks were nationalized. Okay, there are some reasons why the nationalization happened. I will tell you why the nationalization happened. But please remember, at this time 14 banks were nationalized in 1969. Then India also set up regional rural banks in 1975. Okay, India set up some lot of regional banks. At present we have some 56 regional rural banks. Okay, and uh, the second level of nationalization happened in 1980, when 6 banks were nationalized. Okay, banks like Andhra Bank, Corporation Bank, New Bank of India, Oriental Bank of Commerce, Punjab and Sindh National Bank, Vijaya Bank, all these banks were nationalized in 1980. Okay, so another nationalization. This was also happened during the time of Indira Gandhi period. Okay, so two major, so 20 banks were nationalized. 20 banks which were in the private sector become. Please try to just look at which are all the bank nationalized in 80 and which are all the bank was nationalized in 1969. So you will get an idea. Okay. So as I said, why nationalization? Okay, see, uh, government of India, soon after independence, we adopted the planned economic development model. So the planned economic development model wanted, which was in the form of socialist pattern. No, this required nationalization of bank. Okay. Also, in the 1960s, India had too much of financial trouble problem. Okay, and there were also food shortages. Okay, all this led to mm, uh, India. See, why the food shortage was there? No, the agriculture sector was not well financed, well developed, because the agriculture sector was not getting enough credit. Since the bank are in the private side, bank will focus only on profit motive, and they will set up on banks only in cities and major suburbans. Okay, they will set up only in urban and suburban areas, and they will set up and they will provide loan only to industries where they will get more profit. Okay, they won't be lending for developmental purpose in for agriculture and other thing, and they won't be setting branches in rural areas. So the problem was India facing a financial problem. It is because the banks are not penetrated to the masses. The masses are not availing the benefit. So nationalization happened. The second major is the most important reason is to reach every sector. There are other reasons to control monopolies. Okay, and making the banking to go to rural areas, to reduce the regional imbalance. Okay, and to mobilize more saving. In fact, since the bank are not in the rural areas, the rural savings are not mobilized. Okay, in India, still a large part of money is not mobilized. Okay, in fact, demonetization Modi brought, no, the one of the aim, in fact, which was not said, was actually to take the money, savings money from people to the bank. Okay, which was not said, but I think that will be the real reason. Okay, so see, these are all the reasons for nationalization. So for by that, the nationalization benefit, and nationalization also cause some trouble, right? Because this move of mm, mm, nationalization and opening multiple branches, no, in fact, the public sector branches increased by 800%, and it reached rural and semi-urban areas, all these areas which were previously neglected. Okay, and they also got advances which amounted 11,000% high. So bank actually benefited from this. Okay, and it went to areas which were previously not covered by bank. It reached the remote corners. So these are all the benefits, but there were also some uh, um, disadvantages of nationalization. Okay, in fact, some people will criticize nationalization. Okay, why? See, uh, uh, since it was a nationalization, no, it was the government's thing and other things, no, it did not, what you say, bureaucratic attitude was there in the banking system. There was no responsibility and initiative. Bank should be in a competitive environment, rather than bank was in the public sector entirely, and they did not care about the people. In fact, the care will only come when there is a competition. Okay, the customers will benefit only during competition. Otherwise, the government monopoly of bank led to bureaucratic attitude among the functionaries, the banking administrators. Okay, so that actually did not help. Okay, also the lending was done to people who did not return the money, so long overdue loans. Okay, and Another feature is extending loan to agriculture and small scale industries, no, would be risky and less remunerative for banks. In fact, they would be setting up a bank in a place in a remote area where there might not be enough banking. So the banking has to gain some profit to run profitably. For this, they need to get some remuneration in the form of interest, and they are lending to people into agriculture and small scale industries who may at time default. All this may lead to uh, not earning profit. Okay, so these things weaken the banking system. In fact, the competitive environment was missing for the banking. So this led to banking reforms in India in the 1991. Okay, led by the Narasimhan Committee. We will learn banking reforms later very clearly. This is a evolution. I am giving a brief overview. Okay, but here itself you will get enough points you could build upon this. Okay, we will see banking reforms later. So here Narasimhan Committee banking reforms was set up in 1991 after the 1991 reform period. So he gave some recommendation which you will see later, but some of these most important recommendation are: they wanted to open private banks, they don't want any further nationalization. Okay, um, so as a result, India even set up uh, 10 private sector banks. In India, private sector bank was allowed to set up. Okay, like Global Trust Bank, ICICI Bank, HDFC Bank, Axis Bank, Bank of Punjab, Centurion Bank, IndusInd Bank, IDBI Bank, Times Bank, Development Credit Bank. All these banks were set up after 1991, private banks. Okay, and they also allowed foreign bank to have branches in India. Okay, um, the committee wanted to treat all the banks equally so that there will be a competitive environment. Okay, mm, further later there were further many reforms. In fact, we are going to see the reforms later. uh, this led to in recent times payment banks, small finance bank, and now we are having a well developed, well oiled banking machinery in India. Okay, in fact, Indian banking system is considered one of the finest in India, but still we could improve a lot. Okay, so this is the basic evolution of banking in India. With this, I end this lesson. In the next lesson, we will learn about the banking structure in India and the RBI function, which will be a very important lesson. Okay, then we will see in the forthcoming lessons the banking sector reforms and other things. Okay, this is a very very important topic, so keep watching, and if you like the video, kindly like my video and subscribe to my channel, share it with your friends. Bye.